Everybody, Jake here with TrendSpider to go over the broad market update as well as 10 charts, the same 10 charts that we've been going over the last couple weeks, just to see how the charts have materialized and just to see what worked, what didn't, all that good stuff. So starting with SPY, you can see here we are using the Alpha Trends anchored VWAP handoff in this particular example on the daily chart. So you can see here we've anchored the anchored VWAP from this bottom candle in March, and then you can see every time that the price action touched this candle, this VWAP, we essentially anchor another VWAP, and you can see how this kind of creates a ribbon and these handoffs that happen. So what happened here today is essentially almost a perfect bounce off of this second handoff anchored VWAP from May 14th, and we'll just have to see what happens going into the week ahead. We do have a gap above, but we also still have gaps below, especially this 286 to 291 gap below. Can the market move down quickly due to uncertainty? Yes. Is it going to possibly fill the gap on Monday? Probably not. But it's always important to know what's your upside, what's your downside, especially looking at gaps. So those are the two gaps to look at on the daily side of things. The monthly candle did close today on Friday, so we do have some fresh monthly candles to take a look at. You can see here that we are really at the top of this broadening formation, and we'll just have to see kind of what happens going into the coming month. Now, we did do some seasonality, and you'll see from previous videos that we have had during election years a nice pop in the markets during November and December during election years. However, this year is a little different with some of that uncertainty, so we'll just have to see what happens. But going into the Qs, we did break down through the symmetrical triangle here. What I did with the anchored VWAP from the start of this symmetrical triangle is I anchored a VWAP, and then these arrows show you where price kind of undercut that VWAP, and it's about 2.5% these three different times. So what I've done is I've just created an offset, a percentage offset of 2.5% below this anchored VWAP to take into account some of that margin of error. So if we did break down through this anchored VWAP, it's more or less that we want to see a breakdown through this lower anchored VWAP to see if this is really a move down that's worth noting. If not, we have broken down through this anchored VWAP before, so just keep that in mind. Now on the monthly side of things, we do have kind of the same thing on the Qs as we did on SPY, except this is a much longer term trend. So we are at the top of this longer term trend. We have had 2 red months in a row. The market really doesn't do more than 3 red months in a row from kind of what I've seen, at least in this channel. So we'll have to see if we do have a green month in November, or we just have a big capitulation month and then we kind of bottom from there. We'll just have to see what happens, but definitely at long-term resistance here, and definitely some weakness in the bigger names. Now going into IWM was one that we talked about having some strength last week, and then we go to the daily chart and you can see that that is not the case this week, and so we did fill one of the gaps below. We still do have a gap below around 147 to 148. On the weekly side of things. On the monthly side of things, you can see here that we did tag this upper resistance line. We'll have to see if that is temporary or if this is something that is going to continue down for the months to come, or we just go back and retest this into the month of November. But it is interesting to see that the Russell 2000 did have a green close on the monthly chart versus SPY and QQQ showing the opposite. So going into VIX, definitely kind of an interesting case study here. We're talking about, one, the VIX is definitely something that is not necessarily chartable a lot of the time. However, we have been talking about this inverse head and shoulders now for quite some time, and this is a case study that does prove that you can look at chart patterns on the VIX and have a materialization here. So nice move off the right shoulder, huge move up this week. On the monthly side of things, if you guys remember the video we did, we do have that seasonality video talking about since 1990, every election year during the month of October, VIX closes green. So that's pretty natural to have some uncertainty going into the elections. So not really a shocker that this did close green going into the election in a couple days. So we'll just have to see what happens going into the month ahead. However, seasonality does tell us that VIX does have a much lower win rate going into November and December. So make sure to check out those videos. I'll repost them over the weekend so you guys can check them out. But definitely check out the seasonality feature on TrendSpider. It's something that's really powerful and really helped me stay out of the markets this month. I had a lot of other things going on, But looking at that seasonality on VIX definitely did not make me want to FOMO anytime in the markets during the month of October, just because we knew the win rate was so high for VIX during election year in October, it wasn't even worth it. So let's move on to the stocks that we've been watching. PayPal is the first one that we've been looking at over the last couple weeks. And the main thing that I want to point out here is, one, we have this massive gap below, something to consider. Does it mean that we're going to fill it anytime soon? No, but it's just something to keep in mind, kind of an air pocket in price below. Now, what I've also done is I've anchored the VWAP from this gap up in May, and you can see here that the price has been more or less kind of riding along this area. Notice that we didn't touch this area here. This is why we have the anchored VWAP offset, so you can go in and not create an alert, but go ahead and go to properties, and you'll see here if I create a percentage band here, maybe let's do like a 2.5% band above, and so that may take into account some of that margin of error around this line. In this case, yep, so notice now we have this anchored VWAP with a 2.5% offset to the upside, and you can see how well price is respecting that multiple times on the way up. And this would be the level of interest below if we did continue down into the coming week or more. Now, on the monthly side of things, I want to point out this massive divergence here. So I'm using the Williams percent range 12. Why am I using Williams percent range 12? Well, we're on the monthly chart. So 12, there's 12 months in a year. We're essentially looking back 1 year on the Williams percent range for the input here. And so you can see there's some pretty big divergence here, and we're really not even close to being back down to normal levels here. We're still a little elevated on the Williams percent range. This is something I like to use as a lower indicator to gauge divergence really before anything else. So sometimes you'll see divergence on the Williams percent range and not divergence on the RSI. So that's why I like to use the Williams percent range. The reason, as I mentioned, I use 12 is simply because there's 12 months in a year and we're doing a 1 year look back with that indicator. So we'll have to see what happens here. But if you guys do remember from last week, we were finding some negative divergence on some of those weekly Williams percent ranges, and we got quite the follow through this week, and we'll go over that here in a second. So PayPal, that is PayPal daily and monthly. Let's go on to Walmart here. Walmart is one that was showing a pennant last week. That didn't work out too well, and they don't always have to work out. That's the beautiful thing about these setups. They're not guaranteed. They're just a setup that has a probability. Now, what I've done here is we kind of have a few things going on. I did want to just show you guys that the pennant did break down, so that is something to keep in mind. We can get rid of that now. The main thing I want to point out here is, one, what I've done here is I've highlighted this downtrend here, and then finally, once we had this massive candle to the upside, I anchored the VWAP and the volume by price from this candle. You can see how well that the price action has respected this level multiple times over the last few months, highlighted by these blue circles here. And then, this would be a natural area as a level of interest below. And then on top of that, we do have this volume shelf kind of in line with the anchored VWAP from this big impulse candle. So if we did continue down, it wouldn't shock me that the price catches some type of bid here, or at least supply starts to dry up at this volume shelf. Because remember, once the price gets back down to this volume shelf, all of these people holding from 136 down to 138 are no longer holding a profit. They are less likely to sell unless they're getting a margin call or something like that. That dries up the supply and demand kick in from there, and you get a little bit of a bounce. And just because you get a bounce doesn't mean necessarily buyers stepped in. It means that supply likely dried up and relative demand remained constant. So we'll have to see if this holds on the volume shelf. Definitely something to keep in mind into the week ahead. But the thing to also keep in mind here is this huge divergence on the monthly Williams percent range. We have higher highs on price. We have lower highs on the Williams percent range, shown by the downward sloping trend line here. So we'll have to see if this continues into the coming months, or what really happens here, but definitely something to take note of into the last couple months of the year. Going on to GE, never thought I'd say this with the market the way it is, but GE, especially on the monthly side of things, is actually looking remarkably strong, and I'll show you guys why. So on here, I highlighted kind of this diamond possible top formation on GE. Sometimes this will absolutely rip to the upside. I've seen it more than once. But generally, diamond top is a little bit of a bearish setup. However, as I mentioned, just because a setup has some type of bias associated with it doesn't mean that you can't go the opposite way. So just more or less an observation here that there is kind of this diamond forming, and we'll have to see which way price goes. Now, if we go to the monthly side of things, this is where we get kind of this one divergence. We have lower lows here on price. We have higher lows here on the Williams percent range 12 on the monthly chart. If we anchor a volume by price from this this high from July 2016, you'll see that we, one, have this huge base of volume here forming right around here, and you can see price really made a move up from this this zone, and then we have this volume gap. And so remember, volume gap is an area where there's just not a lot of liquidity around here, and so the first area we'd want to get through is anchoring a VWAP from this this high candle here. You can see that we pretty much closed right at that anchored VWAP, and so if we do continue to go move up next month, this volume gap is definitely something to consider. And if we anchored another VWAP from this high, that VWAP is way up in the 13s. So just keep that in mind, and we'll have to see what happens going into the next couple months. But as I mentioned, just GE just having so much negative sentiment around it, being actually a relatively strong candle here on the monthly is something definitely interesting going into the last 2 months of the year. Now, NEO is one that actually did what it was supposed to do last week. So you can see here, or this week, as we talked about it last week, you can see here we were highlighting this bull flag here. If we anchor the volume by price from this pivot here, you can see that we did have kind of this volume shelf. Remember, initially this volume shelf, when the price is below this area, is going to act as an area of possible supply, because all of these people bought, on average around $28. The price moved down to 25. They are at a loss. Once they get back to break even, some people take their break even cash and move elsewhere, and that's exactly what happened for 2 days before the next rip up. It's interesting to see also how these two setups are almost identical. You've got this big impulse candle. You have this inside bar, you have another big impulse candle, you have another inside candle here. So definitely something to keep in mind going into the week ahead. On the monthly side of things, the Williams percent range 12, there's just not enough data from NEO because it just IPO'd in 2018. However, you can see we are starting to get overbought here. You can also see that possible divergence is forming here. We are showing a lower high, at least for now. That can easily change. But you should also consider that it's been 1, 2, 3, 4, 5, 6, 7 months in a row green. We're getting close to that 3.618 extension. We'll just have to see what happens going into the month ahead. DKNG, this may be the most overcrowded trade of the year. It's really interesting to see that this thing just continued to melt down. Now, if we get rid of the anchored volume by price and we just look at this previous resistance line, you can see that it is acting as a potential level of interest for buyers here. So resistance, 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 finally broke out. This turned into potential support, and we actually did get a nice bounce here, at least a very little bounce. We'll have to see if this continues into the week ahead or we just break through. However, the monthly candle is absolutely horrid here. Scary almost. But let's go to the weekly and get a better context of what's going on here. We do have a few things that I want to point out. One, we had two volume shelves here. We had two volume shelves highlighted in orange here. Notice how the price was able to move very quickly through this volume gap here, this area of very low liquidity. So that's not shocking that the price was able to move down very quickly this week, because we did enter that kind of that void of volume, just not a ton of volume there. And remember, we want to anchor this from this capitulation point here, but you can see it's pretty much the same exact volume shelf. So will we hold this one here? That is a big question. Now, the one thing I want to point out is the fact that the Williams percent range is starting to get a little oversold here. And what you'd want to look for in the Williams percent range at this point is essentially some divergence forming. Just because the Williams percent range is oversold does not mean that it's time to buy. Generally, you want to use the Williams percent range for those divergences, and then you want to kind of cross-reference that with the RSI to get an idea of what's going on. And that's really when I'm using lower indicators. I'm really only using lower indicators when something's really overextended or really oversold or underextended, meaning just heavy selling pressure. So we'll have to see what happens. I've seen the Williams percent range signal oversold, and then stocks absolutely tank from there. So let's just see what happens going into the next couple weeks. especially with the coronavirus cases and all that. That's definitely going to affect DraftKings, and if there's any cancellations of games, that type of thing. Now, Target is one that we also talked about last week, having some huge divergence. And if you guys remember here, we were talking about this negative divergence forming, higher highs on price, lower highs on the Williams percent range. Now, this is starting to move down. Will we actually kind of continue down or catch a bid somewhere in the middle range here? We'll just have to see what happens. But if you see, we anchored the volume by price from this low in March. A lot of volume is really still holding in the 120s. So there's quite a bit of volume holding at a profit here. You can also see some volume starting to kind of create a shelf here. This is the same shelf that the price was actually able to move up off of. Now we'll have to see if this shelf is actually an area where price, I don't want to say catches a bid, but maybe supply starts to dry up a little bit. Now, if we do anchor the VWAP from this kind of pivot point here before the move up, you'll see that the anchored VWAP is still quite a ways down. We also do have this gap below that partially filled, not fully. So I don't know. It's hard to say here. We'll have to see what happens. The divergence is not something that I'm loving to see, and the fact that we're nowhere near these oversold levels on the Williams percent range yet is definitely concerning. However, that's not for me to decide. That's for the market to decide. We're just kind of observing what's going on here. But definitely, this has been a very sharp decline on Target. And generally, with sharp declines, you get at least some type of relief here. We'll just have to see what happens going into the week ahead. And remember, if we do anchor the volume by price from here as well, we are kind of right in this pretty heavy volume shelf. So we'll have to see if we get some supply drying up and possibly a bid coming in to get a bounce in price. But for now, divergence has already materialized, but the Williams percent range does show there is more room to move down if it needed to. So Zoom is another one that we talked about the divergence on. So Zoom, we were talking about not only divergence, but also this 3.618, not 3.618, 10.618 extension from this initial measured move in 2019 down to October 21st of 2019. So this is our initial measured move. And then we have the 10.618 extension that almost acted as a perfect level of interest for sellers. And then you can see here this long-term divergence finally started materializing. You can see here, here's our initial high. Here's our lower high here shown by this declining trend line. And so will this continue? We'll have to see. But what I've done is I've anchored a volume by price and anchored VWAP from this August low. And you can see we are breaking down through this volume shelf. If we were to continue down, this anchored VWAP would be a level of interest for buyers. Just because it's a level of interest doesn't mean it's support. As Brian Shannon taught me, I always used to say, oh yeah, this is the next area of support. Well, it's not support until it proves itself as support. So that's something that Brian taught me. I'm really thankful for that, because I always used to say, oh yeah, support below. Well, it's not support. It's just an area that buyers may step in. If they don't, we have a gap below down in the 320s, 340s here. So let's keep an eye on this, see what happens. Will fundamentals finally start to matter? If they do, this PE is really high, so we'll just have to see what happens going into the coming weeks and months. Now, going into Twitter, woo, yikes. Twitter, yeah, ouch. So one thing about Twitter is we are using the same type of approach here with the Alpha Trends anchored VWAP. Initial low in March, as we did on SPY. And you can see here as the price started to move up, we pulled right back down to this area and retested this original anchored VWAP on June 29th. So this is where we anchor another VWAP here. And you can see that we barely missed that anchored VWAP today. So if we do anchor a volume by price from this point, you will see that there is kind of this volume gap here. So remember, a volume gap is just a low liquidity area. So it's not shocking that the price was able to move down pretty quickly through this area. Just not a ton of liquidity, not a ton of friction for price. Now, if we anchor the volume by price from this this March low again, you'll kind of see that here on the weekly side of things. So if we anchor another VWAP, pretty much the same VWAP we were just looking at, then anchor another one here, you can see how this VWAP from this handoff date kind of is in line with this volume shelf highlighted by the green. So will we catch a bid here? We'll have to see. But you can see how strong the Williams percent range had to move down going into the end of the week. So let's move on to actually, before we do that, let's pull up the monthly on Twitter because this is really interesting. It looked like we were potentially breaking out here, and then that's not necessarily the case. We did barely close above this area, but you can see here that is more or less a failed breakout at this point. We are pretty much right at this long-term resistance, so we'll just have to see what happens. One thing I want to point out here, same thing, right? You've got pretty much this higher high, and let's make this pretty real quick. Remove the arrow, make this kind of a peach color. So here's your higher highs, and then here's your lower highs here. And so this is always something to keep in mind. You can't ever, look at the chart and make a decision before the month has closed or the week is closed. But anytime that you're gearing up in the overbought area and you're still not hitting a higher high than the previous high, it's something to consider. Just like what we did on NEO, where NEO hasn't necessarily proven that there's divergence there yet, but it's something to keep in mind that we are seeing a lower high at this point with a higher price. So that is target Twitter. FSLY is the next one, and whew, this thing. Actually, I said DKNG may have been the most overcrowded trade. I think it may be this one, honestly. So let's look at FSLY. You can see that we did break down through this broadening formation here. Let's anchor the volume by price from this area here. You'll essentially see that we're clearly below this this volume shelf forming here. So just a great case study on the fact that volume shelves are not always going to act as an area that price catches a bid. Price can go right through it, slice right through it like it has in the last week and a half. And what's kind of concerning here is we do have this gap below in the 20s. Gaps don't always fill, so just keep that in mind, but definitely something to keep in mind going into the coming months. And notice here that, we're still up, let's say since the bottom here, we're still up 451%. So there's still a lot of people holding profit, even if we anchor this measurement from, let's say, where we initially were in February, we're still up 164%. That's quite a return in a year, and that's a lot of profit people are holding that they can sell off. So keep that in mind. On the weekly side of things, if we kind of pull this up, you'll see that this has been brutally just hammered the last 3 weeks. If we anchor a VWAP from this IPO here, you can see that we did break down through that as well. You can also see that this divergence did kick in. So you can see here, I'm going to start it from May 11th because this was the highest high. And you can see, it's not going to be pretty, but you can see that we kept hitting higher highs on price. And then we were hitting this lower high on the Williams percent range. So you can see here that we're really oversold on the Williams percent range on the monthly side or the weekly side of things. And in the past, that has been an indicator of a sharp reversal. So keep that in mind. This is even one that I have my eye on as a personal trader. Let's just see what happens going into the next couple months. Last one, CRM. CRM is one that definitely also kind of had that case study where you don't always have to have the price hold the volume shelf. You can see here if we anchored the volume by price from this low, pretty much we sliced right through this volume shelf, continued down, now possibly filling the gap below. If we turn on the volume by price on the weekly side of things, you'll see that as well. We'll pretty much just anchor it from the same point here. Let's go find it real quick. So we'll move this over. And you'll see there's quite a volume gap here. So remember, volume gap's just a low liquidity area, not a lot of people holding in this area. And the anchored volume by price and the anchored VWAP both show some shares holding right around 195 to 198 or so. So if the price did really crash here, this would possibly be a level of interest for buyers, and we'll just have to see what happens going into the coming weeks. There's a lot going on in the next coming weeks with elections. Uncertainty is very high right now, and let's just see what happens going into elections and beyond. Hopefully this video was helpful to get an idea of where prices may be going. This video is not telling you where they are going, because nobody knows that, but definitely, hopefully you guys get an idea of how to use TrendSpider in your everyday technical analysis. Remember, we do have a 7-day free trial if you want to give it a shot. If you have any questions, definitely let us know. Make sure to like and subscribe if you enjoy this video, and thanks so much for watching.